Thank you for watching this video. Today we will be doing technical analysis on the stock market for the week ending Friday, January 22nd, 2021. And for this analysis, we will be using stockcharts.com. That is the charting service that I use and pay for, and I will leave a link to their site in the description box below this video. My name is Rodney Constable. I have over 30 years of investing experience, including over 25 years of experience trading stocks and options. I am a former financial advisor, a former vice president of a major mutual fund company, and I am the president and founder of Simple Market Signals at simplemarketsignals.com. We're going to start off with the S&P 500 here, and for the week, the S&P 500 was up 1.94%, and we closed at another all-time weekly closing high of 3841.47. The first chart that we're looking at is a 6-month weekly candlestick chart of the S&P 500. The blue line is set at 3,800. So again, for the week, up 1.94% and a new all-time weekly closing high. And you can see that this is the second week in the history of the S&P 500 where we have closed above 3,800. Took a little bit of a break last week and closed below 3,800, but jumped right back above that this week, and again closed at a new all-time closing high of 3841.47 for the week. The next chart that we're going to look at is an hourly candlestick chart of the S&P 500 for the month of January so far. And the two horizontal blue lines are set at 3850 and 3800. But let's talk about this trend line that I drew right here that really started on January 15th on Friday. Of course, we had that sell-off on Friday in front of the long weekend. The markets were closed on Monday in observance of Martin Luther King Jr. Day. And so you can see this shortened trading week, right? And again, these are hourly candles. So Tuesday, Wednesday, Thursday, and then of course today we had a little bit of a sell-off, down 30 basis points for the day and closed beneath 3850. Not too big of a deal yet, guys, but just understand that, we only had a few hours of trading above 3850 and that we have now pulled back a little bit. Nothing too concerning just yet, but also remember that oftentimes February can kind of be a tough month. So historically, right, when you look at all the Februarys, add them up over the last 40, 50 years, February is historically one of the worst months of the year for the stock market on average. It doesn't mean that every February is bad. However, just keep that in the back of your mind as we move forward. One more thing I want to point out on this chart before we move on is this 3,800 level. You can see that once we hit 3,800 on the S&P 500, which happened here on January 7th, the S&P 500 then traded sideways around this 3,800 level for quite a few days, consolidating its gains and solidifying that 3,800 level before advancing to this 3,850 level. The next chart that we're going to look at is a 6-month weekly candlestick chart of the Dow Jones Industrial Average. And for the week, the Dow was up 59 basis points and closed just below 31,000, closing at 30,996.98 for the week. The blue line right here is that 31,000 level. And you can see that there's only been 1 week on the Dow Jones Industrial Average in the history of this index where it has successfully closed above 31,000. And that, of course, was a couple of weeks ago. We almost made it this week, traded above it for a good majority of the week, but you can see we missed it by just a hair. But again, a positive week for the Dow, up 59 basis points, closing at 30,996.98. The next chart that we're going to look at is a 2-month daily candlestick chart of the Dow Jones Industrial Average. The blue line is still set at 31,000. The reason I wanted to show you this chart is I wanted you to see that once we got above 31,000, which the first day we successfully closed above 31,000 on the Dow Jones Industrial Average was on January 7th. Once we got to this level, you can see that we've really just traded sideways since then around that 31,000 level. So we are getting some consolidation, some sideways trading action in the Dow at this time. It could just be the consolidation that, kind of tamping of sand is the way I think about it, right? Where you get that ground really firm before you move up to the next level. Or, we might be stalling out here, right? We're going to roll over and go lower from here. Only time will tell, but just understand that we have been going basically sideways in a very shallow trading range around this 31,000 level on the Dow Jones Industrial Average since January 7th. The next chart that we're going to look at is a 6-month weekly candlestick chart for the Triple Q. Of course, the Triple Q is the ETF that tracks the NASDAQ 100, and the Triple Q's up 4.35% this week and closed at another all-time weekly closing high. And it's not as important on the Triple Qs, but just so you have this, 325.42 is where we closed the week on the Triple Qs. Wasn't that long ago we had closed above 300 for the first time on the Triple Qs. And part of the reason why the Triple Qs were up so much this week is that Netflix was up over 13% for the week after reporting earnings this week. They had a very good earnings report, so Netflix really helped to drive, and some others, of course, but Netflix was the number one performing stock within the NASDAQ 100 this week, up over 13% for the week, and helped drive the Triple Qs to a new all-time weekly closing high, up 4.35% for the week. The next chart that we're going to look at is a 6-month weekly candlestick chart for the IWM. The IWM is an ETF that tracks the Russell 2000 Small Cap Index here in the U.S., and the IWM was up 2.03% for the week and closed at another new all-time weekly closing high. So these small caps have really been on fire for several months now, really starting kind of in the middle of September, as you see right here, kind of put in a short-term bottom, and they have just been on fire since then. And you'll see in the next chart that I have for you that small caps continue to lead the way, and so far, of all the things we're looking at here, have been the best performing area of the U.S. stock market so far for 2021, and we'll take a look at that next. And as I just alluded to, you can see that the IWM, the Russell 2000 ETF, up 9.71% so far. This is just 2021 so far, guys. So this is about 3 weeks into the year. The small caps are already up 9.71%. We can see that the Dow Jones Industrial Average up 1.28%. The S&P 500 up 228 so far for 2021. And the Triple Qs up 3.72% so far just this year. So we are off to another rip-roaring start in the stock market. But guys, these are unsustainable numbers, right? We're not going to be able to do this every single month throughout the year. It's going to be mathematically impossible. So, we need to have a system in place that helps us understand when changes in the market are taking place. Now, I worked on a system for myself for over 20 years. I call it Simple Market Signals. And guys, even with my background, 20 plus years in financial services, 30 years of investing, 25 years plus of trading stocks and options, I needed this, right, to help solidify what I was doing. And I've now made this available to the general public. So if you are a financial advisor or an individual investor who runs any of your own money, including in your 401k or IRA, I encourage you to pay close attention to the balance of this video, as the following information could be very, very valuable to you going forward. Let me ask you a question. Do you have a stock market risk management and trend direction system in place? Do you know the various risk levels in the stock market on an ongoing basis? Do you know when it's safest to be in equities? Do you know when it's most dangerous to be in equities? Do you know the direction of the trend of the stock market? My system is Simple Market Signals. Simple Market Signals is market-based. There's no opinions, forecast, or guesswork in Simple Market Signals. It took me over 20 years to develop Simple Market Signals. I developed Simple Market Signals by reverse engineering the stock market, and I studied the stock market over numerous time frames, including numerous bull and bear markets. And what I found is that certain conditions exist during various market phases, and then I created simple, easy to understand signals around these different phases of the markets. And the thing is, guys, that most people don't know about or have access to the data necessary to do the research that I had to do to create this model. Simple Market Signals is a proprietary stock market risk management and trend direction model. And Simple Market Signals is perfect for financial professionals and individual investors. There's two major components to the proprietary model. There's a risk level signal and there's the general trend indicator. Let's start off with the risk signals. The risk signals are simply green, yellow, and red. The green signal has the lowest equity risk associated with it. And what you're going to find is that most all upward progress in the stock market will be made in a green signal environment. Said another way, it is hard to make money in equities unless the signal is green. The yellow signal means there's moderate equity risk, and sideways to slightly up or down price action is very common during a yellow signal environment. The red signal has the highest equity risk, and the worst sell-offs, including bear markets, will happen when the signal is red. A quick review of the risk signals. The green signal is the best risk-reward ratio signal for equity investors, and what you're going to find is that most upward progress in the stock market will happen in a green signal environment, as we see here. The red signal is the worst risk-reward ratio signal for equity investors. And what you're going to find is that the worst downturns, including the downturn in Q4 of 18 and the bear market in Q1 of 2020, plus the bear market from 2000 through 03 and the bear market of 07 through 09, all of those are going to take place in a red signal environment. So again, what you're going to find is that most upward progress in the stock market will happen in a green signal environment, and the biggest downturns and losses in the stock market, including bear markets, will happen in a red signal environment. Now let's put it all together and see how simple market signals could have helped you during the fastest bear market in history, which of course happened during Q1 of 2020. We had a strong stock market coming into 2020, so the risk signal was green coming into 2020 and remained green for the majority of January. We did have a yellow signal for about 2 weeks towards the latter part of January, first part of February, and then of course the risk signal went back to green. And then on February 19th, we hit what was at that time the all-time high on the S&P 500. Again, that's February 19th. And then things started to unravel from there. But think about this. Just a few days after the all-time high at that time in the S&P 500, on Monday, February 24th, the risk signal went yellow. And then on Tuesday, the 25th of February, the general trend indicator went negative. And that general trend indicator had been positive since October of 19, okay? So right there, just a few days after the all-time high in the S&P 500, the risk signals started to tell you that something was changing, that there was increasing risk in the stock market. And by Thursday, February 27th, the risk signal was red. And then, of course, the market sold off hard from there. So think about this, guys. I mean, you talk about stress testing my model during the fastest bear market in history, that started just a few days after the all-time high at that time, the all-time high in the S&P 500. In 1 week, the risk signal went yellow, the trend indicator went negative, and then the risk signal went red, all in the same calendar week, actually within 4 days, right? Monday, Tuesday, and Thursday. So you talk about stress testing my model. Guys, I mean, this is the fastest bear market in history, and look at how simple market signals could have helped you during that time. With simple market signals, you will know what the risk level is and what the trend direction is in the overall U.S. stock market. And the proprietary model is based on S&P 500 data. The S&P 500 index really is the best proxy for the overall U.S. stock market, and it's the only index that has all of the data available that I need to run the model. And guys, it's not about beating the S&P 500. However, that is a possible outcome over time if the tools within the model are employed properly. It's about risk management and risk control. It's about controlling your risk exposure rather than letting the whims of the market dictate your future. The best fit for simple market signals is an investor or a financial professional with at least a 6 to 8 week plus time frame that they're focusing on. If you're a shorter term trader or a day trader, simple market signals may help you a little bit, but the reality is that the best fit between simple market signals and a subscriber is somebody that has at least a 6 to 8 week time frame or more that they're focusing on. These signals are delivered to subscribers in our weekly emailed newsletter. As part of the Simple Market Signals weekly newsletter, you will receive the proprietary risk level signal and charts on the overall U.S. stock market. You will also receive the general trend indicator signal and charts on the overall U.S. stock market. You will also receive a weekly recap of what happened in the U.S. stock market, including performance information and charts. And this is on multiple investments. So we cover small caps, mid caps, large caps. So you'll have a great idea of what's going on in the entire U.S. stock market across all capitalization. You will also receive technical analysis data and charts, so things that are interesting and educational that I think is important for you guys to know will be included in the newsletter on a weekly basis. You will also receive fundamental analysis data points on the S&P 500, so we look at potential earnings per share for the year, as well as the possible PE ratios, and then price levels looking out to the end of this year, and then I generally go out to the end of the next year as well. So you'll have great fundamental analysis data to work with on the S&P 500 right at your fingertips every single week. You will also receive yield curve information and data points. So we look at the 2s and the 10s. So the 2-year Treasury note, the 10-year Treasury note, and then the spread, the differential between the 2s and the 10s. This information, guys, very few people know about it. Very few people watch this. This is so important to really get your head wrapped around because it affects so many areas of the financial markets. And you will also receive the proprietary risk level signals on all 11 major sectors of the S&P 500. So not only do you get the risk level signal on the overall market, but we also give you the risk level signal on all 11 major sectors of the S&P 500. So you can see what the risk level is underneath the hood on all of the individual sectors. And you will also receive sector performance information on all 11 major sectors of the S&P 500 over multiple time frames. So guys, you're going to get all of this, right? And it's going to make you so much more knowledgeable about the financial markets. You're going to be able to have a conversation with virtually anybody about the stock market, and you're going to be able to really understand things at a level that very few people do. And guys, you're going to get all of this for just $19.95 per month. That's less than 67 cents per day. I want to set realistic expectations. The weekly emailed newsletter isn't fancy. It's effective. It's plain text, no color, other than the charts, of course, and no fluff. But it's chock full of extremely valuable information week after week. And please note, due to international compliance regulations, you must be at least 18 years old and a citizen of the United States of America who is currently living in the U.S. in order to subscribe to Simple Market Signals. And again, this is just due to international compliance regulations. A subscription to Simple Market Signals is just $19.95 per month. It's billed monthly on your credit card. There are no contracts. You can cancel anytime, and your first 2 weeks are free. Sign up is quick and easy. Just go to simplemarketsignals.com. That's https://simplemarketsignals.com. It'll take you about 4 or 5 minutes to subscribe. It's that easy. Once you reach the website, the first thing you will need to do is accept the cookies. Please notice that due to international compliance regulations, you must be at least 18 years old and a citizen of the United States of America who is currently living in the U.S. in order to use this website or our services. And that is just due to international compliance regulations. All right, so to get started, all you have to do is click this green button, and that will take you to the product page. And this explains, of course, what you get with your subscription. And then just make sure that that says 1, because if there's more than 1 in there, if you have a 2 or a 3, you'll get multiple subscriptions to the service, and you only need 1. Click the Sign Up Now button, and that will take you to the checkout page. Once you're on the checkout page, fill in the necessary information, anything that is required, including the email address. Keep in mind that this is an email newsletter, so we will have to have your best email address on file, and make sure this box is checked, because that's how your email address gets into the system. So if that is unchecked, your email won't get transferred into the Simple Market Signals system, and you won't get your newsletters. So please make sure that box is checked. And then, of course, just double check, make sure that your monthly total is going to be $19.95 a month. Remember that your first 2 weeks are free, so your first renewal date will be 2 weeks after your subscription date. Fill in your credit card information. You will need to accept the privacy policy and check that box that says you've read and agreed to the terms and conditions. Click the sign up now button, and it's that easy, guys. It's probably going to take you maybe 4 or 5 minutes total to fill in everything and subscribe to Simple Market Signals. A few points to remember with respect to your subscription to Simple Market Signals. Remember that everything is tied to your email on file. Now, once you subscribe, you will get an immediate emailed confirmation of your subscription. You will also receive an automatic welcome letter, so that's automatically generated from our system. And whether you see that welcome letter or not, I would encourage you to double check your spam, junk, trash, and promotion folders, especially for the first several weeks of subscription, because once in a while, our emails get automatically routed into one of those different folders depending on your email service provider, whether it's Gmail, Yahoo, whatever it may be. And I would get in the habit, I would encourage you to get in the habit of every week or two, just go out real quick and double check these different folders, the spam, junk, trash, and promotion folders, because I can't even tell you how many times I've had people say, well, I didn't get the email, and then when I tell them to go out and check those various folders, oh, there it is. So it's just, the reality of having an emailed service that once in a while, and it's going to vary from email service provider to email service provider, but once in a while, the emails from us, depending on the subject line and other things, will get automatically routed into one of those different folders. Also, I would encourage you to whitelist all emails from Simple Market Signals. In other words, just make sure that your email service knows that you want all Simple Market Signals emails to go to your primary in basket. Also remember that newsletters go out on the weekend, okay? They generally go out Saturday afternoons, but they could go out anytime over the weekend depending on our production schedule. And the next new edition will be sent to you on the weekend following your subscription. So if you subscribe on a Monday, Tuesday, Wednesday, whatever it is, the next new edition is going to come out on that weekend following your subscription. But we will also send you the latest edition, so whatever the most recent edition of our newsletter was, we'll send you that latest edition as soon as we can, but we have to manually send that to you. Generally, you will receive that within 24 to 48 hours of your subscription. So again, if you don't see that first newsletter within 24 to 48 hours, go back and double check your spam, junk, trash, and promotion folders to make sure that it's not hidden in there. Also, within that first 24 to 48 hours, we're going to send you at least 1 or 2 emails with links to training videos that are for subscribers only. So please make sure that you're looking at all of this, because it's extremely important for you to get the most out of your subscription. Please watch those videos that are part of the training material that we send you. Now let's recap what you will get with your Simple Market Signals subscription. With your subscription, you will receive the weekly emailed newsletter, which goes out on the weekends, that will include all of the content that we just talked about. Plus, you will receive midweek update emails when warranted. So if there's a major signal or trend direction change in the middle of the week, we're not going to wait until the weekend to get you that information. We're going to send a midweek update email to get you that information as soon as possible. So again, a subscription to Simple Market Signals is just $19.95 per month. That's less than 67 cents a day. It's billed monthly on your credit card. There are no contracts. You can cancel anytime, and your first 2 weeks are free. To get started, just go to https://simplemarketsignals.com.